Something is brewing at the Fed, especially over the weekend into Monday. Let's talk about that. Markets are down a little bit today. Do you know the reason for that? There's been an announcement over here at the Fed that they are going to have a bit of a closed meeting on Monday prior to the expected FOMC meeting by mid-March. So this is an expedited procedure, as you see over here, and they're going to consider the Fed funds rate. Basically, these rates over here, we see the market expectations for the rates. And in the previous video from several days ago, we saw that market was mostly leaning into a likely 0.25% hike by the Fed in mid-March. By now, as you see, expectations have changed significantly. And as I mentioned in the recent video, the expectations in these changes are likely to move markets into that Fed meeting by mid-March. We see that expectations have tilted nearly completely to 94.7% expectation that the rate hike is actually going to be 50 basis points or 0.5% rather than 25 basis points. And what do we see now? Beyond that, we see that Fed is announcing a bit of a expedited meeting on Monday where they will consider the rates, and perhaps that means that an earlier than expected rate hike is coming up. So a rate hike is generally not a good thing for the stock markets, so we see a bit of a red candle yesterday. And as I mentioned in the previous video, all of these expectations of the hikes into mid-March FOMC are going to make this recovery out of the intermediate cycle low kind of difficult, kind of volatile. And perhaps as markets open today on Friday, you'd have to consider, do you still want to hold equities with the expectation of maybe possible rate hike, early rate hike on Monday? Because if that rate hike actually happens, that might actually bring stock markets lower and make this recovery out of the recent lows that much more volatile and that much more difficult. Looking at the VIX, the volatility index, we see a bit of an increase in the VIX. Usually a rising volatility index coincides with drops in the markets. So the question is whether this big green candle on the VIX yesterday is a bit of a forecast of a new uptrend in VIX over the next few days. Again, if that is the case, perhaps you want to get some cash, at least out of some part of your equity allocation. What I want to do is I want to see what happens as the markets open on Friday, and I'll make my decision then. Looking at the dollar index, I think the dollar has started a new intermediate cycle just around a month ago in mid-January, although that decline into mid-January was quite modest, very mild. Given the duration of this rally, I think we've finally seen the intermediate cycle low in dollar. But as I also mentioned in some of my older videos talking about dollar, I don't expect this rally into a new intermediate cycle to continue for too long, as I'm generally bearish on the US dollar in the longer term. Again, for the longer term view at the US dollar versus gold, you might want to have a look at this video from 3rd of January. So as the daily cycle is approaching its midpoint, but as the intermediate cycle is still somewhat early, perhaps a few more upward days in the US dollar index before it comes down into the short-term daily cycle low, another bit of a bounce into the new short-term daily cycle low before it continues down, kind of declining into that intermediate cycle low later on. So what does it mean for gold is that although also, as I've mentioned in one of my previous videos, there is probably a 40% chance that we've seen the intermediate cycle low in the middle of December, implying that gold generally will trend upwards from here. I think there is a 60% chance that the intermediate cycle in gold is still ongoing, and we are now in the third short-term daily cycle low of that intermediate cycle. So as the dollar pushes higher, and as Fed threatens with the rate hikes, perhaps that will bring gold down into this short-term daily cycle low, which will likely also be the end of this intermediate cycle. How low will it come? Well, that remains to be seen. One support zone that's been respected for a while is around 1760 over here. Whether gold drops below that or not, again, remains to be seen. Wherever the bottom comes, this intermediate cycle low is likely going to be a really nice buying opportunity into a new intermediate cycle. And as I mentioned in my recent silver report, I'm actually more bullish on silver rather than gold. So you might want to have a look at this video as well. And lastly, a quick look at wheat. Our take profit was triggered just at the top of this candle at $7.7 before wheat prices came back below the 50-day moving average. So that's pretty cool. And we do trade a range of assets at myfinancesteacher.org. So for more details on a range of assets, you are more than welcome to join us at myfinancesteacher.org. Have a nice day and bye-bye.